the Fed has to be cautious because they need to be making their decisions based upon the actual implemented policy that they see and the macroeconomic consequences of that. And we have to take basically any of this for a great any political rhetoric and campaign rhetoric for a grain of salt because you don't know whether or not those policies are actually going to be implemented. While people in the markets will start to probabilistically price that in, it's not the Fed's position to start to guess at what future policy will be. If large tariffs are implemented and that affects inflation readings, then the Fed will respond, but not until that becomes pretty clear.
What about shifts to the labor market? Would any candidate and their respective policies put downward pressure on the labor market more than the other, you think?
I think the biggest one of the biggest policy divergences is on the immigration front, and part of what has been a meaningful loosening of the labor market, the U.S. labor market, over the course of the last couple of years, has been less than college educated workers. Primarily as a result of the increase of immigration into the U.S. And so if we have, say, a Trump administration that's going to be much more constraining in terms of immigration or even possibly meaningfully reversing the number of unauthorized workers in the U.S. economy, that could create a tightening of those labor markets, particularly at the lower income cohorts, which could basically create a tightening of conditions and risks bringing back inflationary pressures.
You know what's interesting, Bob? Take a look at my screen here. We have here the VIX, right? So as you can see, it's been relatively flat. However, if you flip over to the MOVE index, which is the VIX for bonds, significantly higher. Why is the bond market pricing in something that the stock markets may not be?
Well, I think there's a lot of questions in terms of the magnitude of the fiscal stimulus that we're going to see, the deficits, and also whether we're going to continue to see Fed policy shift towards accommodation. And you put that all together, the sort of big questions that are outstanding, they're less about, is the economy going to be, strong enough ahead? I think that's less ambiguity there. There's a lot of momentum in the U.S. economy to maintain its strength. And the real question is there going to be profligate monetary and fiscal policy that's going to show up in a buyer's strike in the bond market? And that's really why we're seeing that uncertainty in the U.S. bond market.